impactful application of its products churned out the influx of foreign direct investments and of course the enhancement of financial inclusion. There still exists that skepticism in some quarters. We're talking about concerns of the place of non-interest banking amidst increased calls for more Sharia compliant products. I'm here again because it's another impactful application of your time with Amorgate Radio Communications. My name is Abiod Abari and the program is Optimizing Opportunities in the Ethiopian Banking Sector. It's a delight having you, so thanks a lot. We at Amorgate are committed to working with you in that transformational journey of your organizations, ensuring top-notch support for your lofty corporate goals, and we believe that adding value to investors' commitments should be prime, and that is why it's important to understand the opportunities unfolding in the Ethiopian banking sector and how to optimize them. So if you're looking to ensure value for investors' funds, then this program is your go-to. We are here to break it all down for you to understand, assimilate, and synthesize relevant information for your advantage. Last episode, we continue to look at the banking sector reform, which is at the heart of the Ethiopian Prime Minister Abiy Ahmed Ali's economic reform, talking about the moves to modernize the banking sector and attract foreign direct investment. And the use of the banking proclamation issued by the National Bank of Ethiopia, that's the regulatory authority, in December 2024 as a game-changing publication to enable the path for foreign bank participation in Ethiopia's economy. And despite the allure of benefits like better competition, more competitive interest rates on loans, and broader access to banking services, having innovative and tailor-made products churned out, the influx of foreign direct investments, and of course the enhancement of financial inclusion. There still exists that skepticism in some quarters. We're talking about concerns of the place of non-interest banking amidst increased calls for more Sharia compliant products. And also the need to avoid putting the cart before the horse. That is actually admonishing the need to get a grip on internal economic, political, and security issues before actually opening up for the participation of foreign banks in the economy, and of course the issues pertaining to small Ethiopian banks, that could actually just be obliterated on the competition from big brands, from big foreign banks. And I gave my opinion that Ethiopia is actually coming late to the party, and looking at how the lack of access to finance and financial tools, how that actually hampers productivity in Ethiopia, causing an impediment, and individuals are affected in terms of standard of living. Talking about the quality of housing, they'll be able to afford it, if they don't have that access to finance. All right. And also talking about acquisition of education and specialized skills with which they can use to better their lives and get better jobs and improve the lives of their families and loved ones. And of course that is contributing at that level in the economy of hand, talking about SMEs too and entrepreneurs who are not being able to finance their creativity, innovation, their thinking, their plans, right? And without discounting the larger implications for private sector growth and overall inclusive economic growth. Okay, and moreover, I don't think that the game changer, as I like to call the banking proclamation published by the National Bank of Ethiopia in December 2024, I don't think that document, I don't think it upends the existing framework for the authorization of interest-free banking in Ethiopia. Okay, and the Ethiopian government has been able to stop the bleeding, and as it concerns inflation, and also being able to manage the debt better, as evidenced by the evidence of the recent debt rescheduling. Okay, so we have to understand that smaller banks too, may also explore. Talking about smaller Ethiopian banks, existing Ethiopian banks may explore merger or acquisition options to be able to ride the wave of competition. So I believe that the benefits far outweigh the costs, and the risks of the concerns could be well mitigated and could be well managed, and the objectives of the reform could be well achieved with apt implementation. Okay, and really the larger need to ditch the existing sustainable system of government dominance and of the economy, and adopting that structural reforms, that can actually correct these macroeconomic imbalances. Okay, the need there to attain competitiveness in the critical sectors of the economy is not lost on the Ethiopian government. All right, and you have to understand that moving to a market dictated system of by prioritizing government-owned enterprises, and cutting regulations and red tape, and opening up sectors for private sectors participation, and also foreign companies, foreign bodies, foreign organizations involvement, foreign banks to involvement. Okay, so and that's just the way to go. Okay, and that critical role that banks play in the economy cannot just be overflogged. Galvanizing funds and funding the same to critical sectors. And being the lifeblood of the economy. So it's very, very important that the banking sector reform is at the heart of the economic reform of Prime Minister Ahmed Al-Ghazali. So we also look at benefits to investors in terms of adding value to their investments, benefits to government and the good people of Ethiopia in terms of an improved economy, and country in general, and benefits organizations and firms, would work, with these foreign banks in their quest to partake in the Ethiopian banking sector. And I'm talking of firms like ours, firms like Armagate, with over a decade experience working with the organizations and institutions in and beyond the banking sector in Ethiopia. We are of course in good stead to add value to processes, making them seamless and optimal. And yes, we have started to look at these opportunities, these benefits one by one, with a view to breaking each one down, for a better, actionable, optimal insight and understanding. Yes, we started to take a deep dive into enhanced financial inclusion as an outcome of this banking sector reform. This opening up of the Ethiopian banking sector for foreign bank participation in terms of a subsidiary branch or representative office. Okay, so it must be said that the objective of enhancing financial inclusion is at the heart of the Ethiopian banking sector reform. And it must be said and well noted that Ethiopia has a quest to achieve 70% financial inclusion by 2025. Okay, from what is actually abysmal at the moment. Okay. Yes, so in breaking financial inclusion down, we try to look at it as being the access to and the use of formal financial services. Okay, access and use of services found within the financial services system, the formal financial system. Okay, it's a mission to bring in the marginalized, the excluded, the disadvantaged, the underserved, individuals and firms, whose access are limited or absent. Okay, so that they are able to have the access and utilize adequate, affordable, and responsible financial products and services. All right, basic products and services, and also tailor-made products and services. All right, so talking about services like banking, savings, all right, payments and settlements, all right, in the course of the economic activities, and also insurance too. All right, so all those services are not far-fetched, all right, are not actually over ambitious services, all right, and talking about loans and credit too, to be able to pursue their own ambitions, okay, and making their dreams into plans that can actually be realized. All right, so it's more about making that financial field, leveled, all right, enough to be able to bring in, wider participation, to engender wider participation, down on the banked firms and individuals utilize these products and services, okay, because if they're just there and they're not being used, okay, create the access and they're not being used, it means that the objectives of financial inclusion will not be achieved, okay. And when the objectives of financial inclusion is not achieved, the overall benefit for the banking sector reform will not actually be optimal, okay. So it's quite important that financial inclusion objectives are achieved, so that more people are brought under the umbrella of the formal financial services system. More people are captured, okay. So that will mean more business activities for investors, for banks, and also there'll be more opportunities, okay, to make profits too, okay, for banks and foreign banks that are coming to this sector, okay. So it's important that the objectives of financial inclusion is actually achieved. And in achieving the objective of financial inclusion, okay, there should be that efforts to ensure that all the obstacles, okay, that actually account for people being excluded, groups being excluded, all those obstacles are actually expunged, okay. All those obstacles are removed, okay, and so that people can adequately participate in the formal financial sector, okay. And the enabling access to affordable and tailor-made and lives impacting products and services. All right, so very, very quite important that to be able to achieve the objective of financial inclusion. All right, so efforts should be made to ensure that those stumbling blocks, okay, those obstacles, all right, those challenges that prevent people from participating in the formal financial system, those obstacles are neutralized, all right, and people are then enabled to be able to access affordable and tailor-made and lives impacting products and services, okay, because it's very important that the products are relevant to their lives, so that it will encourage application, to encourage use, all right. So that opportunity to use financial services as when money needed should be made available. Okay, we are looking at how to ensure that financial inclusion is enhanced, how to ensure that financial inclusion, okay, is achieved, because we understand that financial inclusion is at the heart of the banking sector reform and in Ethiopia. Okay, the enhancement of enhanced financial inclusion, okay, is at the heart of the banking sector reform in Ethiopia. All right, and we understand, the importance, the critical element that financial inclusion is, even for foreign banks, for investors that are coming into the Ethiopian banking sector, okay, because that provides a wider market for them to reach, be able to pursue their business activities, their banking services, okay, financial services, okay, and giving them a wider market, okay, and the level of financial inclusion, okay, which is low in Ethiopia, provides the opportunity for foreign banks to be able to pursue businesses, activities, and come up with innovative products, tailor-made products that will ensure utilization by these underserved, these disadvantaged, these unbanked and underbanked individuals, firms, and communities and groups. So it's important that the cost of the financial products too are reasonable, they're competitive, they are within the reach of our target customers, because if the costs of accessing financial products and services, the costs are exorbitant, it will actually disincentivize utilization, okay, and the objectives of financial inclusion might not be achieved. So that's quite important to be on the lookout for. Okay, so and it's very, very important for financial institutions to provide services responsibly, and sustain a sustainable manner, okay, and marginalized and disadvantaged and underserved groups, okay, often excluded from the traditional and formal services services and systems, okay, and we understand that these groups this kind of exclusion is something that actually transcends various sectors of life, various sectors of the economy. It's not just the banking sector, okay, even in the larger politics. All right, talk about groups of talk about women, old people, low income earners, you talk about micro enterprises, rural dwellers, and so these people need to be targeted with tailor-made products, okay, products that are relevant, products that will incentivize usage by them, okay, because if these products are there and they are not well used, they are not well utilized, then the objectives of financial inclusion might not be achieved, and the overall impact on the economy and of course the value that's meant to be added to investors that are coming in might not be optimized. So that is very, very crucial. Okay, so the products and services should be used regularly by the targeted customers to ensure that the objectives of inclusion, of financial inclusion, are met. And with the way the Ethiopian economy is structured, with agriculture as its mainstay, okay, as the means of livelihood of more than half of the population. Right, so that lack of access to finance and digital tools actually worsens the existing condition of that condition that has been exerted by subsistence-oriented agriculture, which is actually not sufficient to drive the kind of growth that is necessary for a country like Ethiopia. Okay, so and we also look at the effects of a drought and this irregular, unpredictable rainfall too. So with that, you look at the opportunities for for investment, and also looking at the challenges to financial inclusion. So products will actually target the agricultural sector, so that people who are subsistence oriented in their farming can be able to transit to commercial farming, so that be able to drive growth in the economy. And also it's important it's important to also talk about the efforts of governments are using microfinance institutions in addressing the issues of financial inclusion. But there are the challenges they face, challenges of low outreach, okay, and the need to actually expand their outreach and look at these microfinance institutions, not having the required capital to be able to reach every necessary location, every necessary geographical area that needed to be covered, because the level of investment that we needed to be able to achieve such coverage, such outreach might just be lacking. Okay, so and you're talking about the products diversification, because having tailor-made products will mean product diversification, variety of products, so that products are suited to target customers. Okay, so and if there is inadequate product diversification, the existing microfinance institutions have not been able to achieve the objectives of financial inclusion for which they actually licensed. So and of course talking about research and innovation, which is very, very quite important, and which is also cost heavy. Okay, and the microfinance institutions they don't really have the financial muscle to be able to undertake adequate research, to be able to come up with innovative products that will be able to encourage participation, encourage usage by the target and intended customers, the underserved, the unbanked and underbanked. Okay, so and it's also important that issues of the weak internal control system. Okay, so and why the system of internal control, if it's weak or inadequate, okay, it has its own effects on the performance, on the productivity, on the figures, on the on the bottom line, and and actually if operations are not actually well subjected to internal control, it's just a recipe for failure. And also the issues of the information system, which really is grossly inadequate, and once where it's available is at very, very high cost and inefficient for continuous operation. So those are some of the challenges that microfinance institutions have really face in Ethiopia. Microfinance institutions in their quest to achieve enhanced financial inclusion in the Ethiopian banking sector, bringing in the unbanked and underbanked, into the formal financial system. Okay, so that there is that need to always try to encourage usage, so that incentivize usage. Okay, and it's very important that costs are low, offering a basic or low fee accounts, all right, because if the costs are prohibitive, it will actually incentivize usage. Okay, so and financial services system. Okay, I mean, if it's easy for them to be able to settle their rates or settle their accounts with government, okay, through such accounts, that to actually encourage inclusion, because we're looking at ways to be able to incentivize, the target customers, the unbanked and underbanked, those who are outside the formal financial services sector, to be able to bring them in, to be able to achieve financial inclusion objectives. Very, very important, because financial inclusion objectives will bring about economic growth, okay? And there will be increase in savings when you bring them in. They'll bring in their own funds, okay? And those savings will translate to investment, and investment is bringing about productivity and general economic activities, and the GDP growth, and there'll be prosperity. All right, so financial inclusion will ultimately lead to increased prosperity, and that increased prosperity is a reduction in poverty, and that is very important, because with access to finance and digital tools, to fund their endeavors, and improve their lives, to have access to the better education, and be able to fund their enterprise, their creativity and innovation. I mean, people will be able to get more resources and be more productive and be more prosperous, and be able to improve their lives and get out of poverty. All right, we've seen economies bringing their people out of poverty, from China to India to Malaysia, and there you have those examples. That all right, so Ethiopia too can follow in that stead, and by with the banking sector reform, which is, if it's actually got right, to actually improve financial inclusion, which we bring in that this benefits that we talk about. Okay, yes, and I talked about ambitions of Ethiopia to ensure 70% financial inclusion by 2025, and because we have the percentage of banked adults, which increased from 22% in 2014 to over 46% in 2022. Okay, so obviously a lot of work still needs to be done. All right, and especially in rural communities, where over 75% still face inhibited access, and the gender disparity is alarming. I think about 39% to 55%. Okay, talking about women to men ratio. So, like I said, with Ethiopia's ambition and looking at agency banking as a way to be able to achieve enhanced financial inclusion. Okay, so there will be opportunities in agency banking for banks, foreign banks, coming in, and also existing banks in Ethiopia, to be able to bring in underserved communities, bring people who are domiciled in difficultly terrained areas. Okay, and that the United Nations Capital Development Fund, the UNCDF, and MSC Global Consulting jointly organized a 5-week training for selected financial services providers and non-financial institutions, to equip them with the knowledge and skills to enhance the delivery of agency banking and performance management in order to promote financial inclusion. That was in October and November 2023. Okay, so talking about how agency banking is an effective tool for expanding financial access. Right, so our agency banking enables financial service providers to reach remote and difficultly terrained areas, providing essential and relevant products and services to excluded and underserved groups and communities. And with that, we've come to the end of today's edition. And please do remember that at Armorgate, we are always ready to help and support organizations to work optimally, creating frameworks and processes for optimization of resources and attainment of goals. You can contact us on Facebook, LinkedIn, Instagram at Armorgate. And you can also subscribe to our Facebook, to our YouTube channel at Armorgate. And you can also visit our website at www.thearmorgate.org. Our email is contact@thearmorgate.org. Yes, I hope the time we've spent together has been impactful, and from our own end, it's been a pleasure hosting this. Until I come up on your devices again, it's Bye for now, and God bless. Thank you.